I'm Alicia Walls, the COO of the Washington County Community Foundation, and I just want to welcome everyone here to this Zoom webinar today. It's a cold January day, so I'm sure you're happy to be joining us from your living room / office / bedroom / working remote situation for this webinar. And with that, I'm going to just pass things over to Betsy Chu, our president and CEO, who is going to walk us through this really interesting topic that I hope will be useful to you. She's laughing because, it's not as glamorous as some of our other titles are for some of our webinars, but it's great information. And so we're glad that you're with us today.
All right. So I really appreciate everyone taking time today to participate in this webinar. I can tell you that we're following you. We're following each of you. Your progress. We look at your balance sheets. We know what some of your strengths are. We know what your challenges are. It was a challenge actually that Lisa Hannum had explained to me about a year ago that led us down a path to make a grant to help her with that. But and as a result, this information piece was put together because we feel that others can benefit from the same topic. So what we're talking about, obviously, are administrative reserves and lines of credit. Two financial tools help you maintain operations during challenging times. We do them together. We're doing this together because I believe that they both work best when they work together, and when your organization has both, and you're letting the best benefits of each of those come to light as you manage your organization. So really informal. If you have any questions along the way, just ask them as you have them. I mean, we'll have a Q&A at the end, but if you have a question as I'm moving along, just feel free to ask that question. So we're going to use domestic violence services as our case study. This is a real life, this happened. This absolutely happened. And Lisa Hannum is on the call, and she'll be able to answer any specific questions that you might have from her because she implemented these things. So we're going to go a little bit of background on domestic violence services. They've grown. Kudos to Lisa and her team. They've grown in recent years. Their annual budget now is about $2.7 million. Of that amount, almost half, 49% of the revenues that they use to operate the organization are through reimbursable grants that are invoiced quarterly, 1 month after quarter's end. So if you're responsible for paying bills at your organization, you can real quickly see, well, if half of my money, I've got to spend almost 4 months before I spend it, before I get it back, you know that that's a tough situation to be in. During the pandemic changed everything. And so during the pandemic, what Lisa and the domestic violence team experienced is that there was an increased time period from when they submitted that invoice for reimbursement and when they actually got the money back. Lisa was telling me that they'd be checking the checking account every day. Did they deposit the money? Did they deposit the money? A very stressful time. So another thing about domestic violence is they own a building in Washington. That's one of their safe houses. So domestic violence has an administrative reserve. They had one already, or they still have one. And it's approximately 3 months of their annual operating budget. They do have that invested in a brokerage account. And again, kudos to domestic violence services for enabling their money to work for them. They had a line of credit, but it was only $50,000, and it was insufficient to meet its cash flow needs, particularly when they had this increase in their programming. So to meet the increased cash flow needs created by the growth in their programming and that increased lag in payment for services rendered, what they were forced to do is, take a loan or take money out of their administrative reserve just to cover that short-term cash need. And obviously that's not a good thing to do. And now, like yesterday, the stock market, the S&P dropped 400 points or something. Let's say she had to take the money out yesterday. She's already lost all that money. When she goes to put it back in, because she's selling to get what she needed, she would have to sell more of her investment to get the dollar amount that she needed. So there was a market implication of doing that. That's not a good situation to be in. So Lisa says it was an ongoing struggle to find the cash to pay the staff and other bills as they would wait for government reimbursements for services that they had provided several months prior to that. So let's talk a little bit about the administrative reserve. What exactly is an administrative reserve? So it's money set aside by your organization, by your nonprofit board in a designated fund to enable the nonprofit to continue operations during significant unexpected losses of income and or significant unexpected increases in expenses, or a little bit of both of those. Think back, if you get some government money, think back to the state budget impasse, whatever year that was. Everyone was expected to provide all of their services, but nobody was getting any money. So that is certainly a significant unexpected loss of income, at least in the short run, that put a lot of organizations in a difficult position. So typically, the nonprofit board will designate a portion of, this isn't really an accounting term, assets without donor restriction. It used to be called unrestricted net assets, and that's the appropriate, that's something you can take from your, to create your administrative reserve. The industry best practice is to have at least 6 months and preferably 1 year, a full year of your current operating budget in your administrative reserve. The administrative reserve is different from the administrative endowment. And for this presentation, we're talking about the administrative reserve, full access to principal. So if you have an administrative reserve, you should have an administrative reserve policy. At the Community Foundation, we're big on policies. We got a policy for everything, and that really just spells out the terms of how things operate, and we find them to be very, very useful. So if you don't already have an administrative reserve policy, these are some things that you can put in there. And at the end, when we upload this to our website, we'll put a draft administrative reserve policy and a draft line of credit policy up on the website for you to borrow if you need to. So if you have an administrative reserve policy, the purpose is to establish the approval process to draw upon the administrative reserve, to determine the investment of the administrative reserve, and to establish a reporting and review process to keep your board informed of the activity in the administrative reserve. Some sample elements of the policy include a minimum of X amount of months of the current operating budget. As I said, it's the industry standard is 12 months. Lisa has about 3 months in hers. I can tell you the Community Foundation, we have about a little better than 9 months. Our policy is 9 months of our current operating budget. At some point, we want to move it to a full year, but we're not quite there yet. So just know that you can amend your policy and should amend your policy as your circumstances change over time. So again, the minimum of some amount of money, and that might only be 1 month if you're just starting out. You got to start somewhere. So we also, in our policy, we put in there the maximum draw in any calendar year, in our case, is 25% of the administrative reserve. That's something that you would work out on your own. So it's not going to be easy to build the administrative reserve. So once you have it, you kind of want to, I mean, you want it to work for you, but you also want to guard against just, frivolously taking the money out if you really don't absolutely need it. We have a finance and audit committee here at the Community Foundation, and it is their charge to review all proposed draws on the administrative reserve. And then they provide a recommendation to the board, and then the board makes the determination of yes, we will or no, we won't. This is pretty, I would say, restrictive in a way, in that if you've had yours for a while, your board may feel comfortable in just having the finance and audit committee just approve the draw on the administrative reserve. But that you would know that by working with your own board. And if you don't have a finance and audit committee, that would have to go back to the full board. So you want more than just you and your finance person making that decision. So we say Rome wasn't built in a day, and neither will your administrative reserve be. but we strongly encourage you to start today. Even if you can only put aside 1 month of your operating budget, start today and get it going. Your most faithful donors can help you start and build your administrative reserve. Large unrestricted gifts, including large bequests, are your perfect ways to initiate or grow your administrative reserve. Lisa, can you tell us how your administrative reserve was initiated?
Yes, that started well before me. I've been with the organization since 2015, but I wasn't in a position to be privy when it all started. But the bottom line is it started with someone donated Heinz stock to us. And so that's how they got it started.
Right. And it was a large gift for you relative to your budget. And, thank goodness the board said, hey, let's put this aside for the rainy day type thing. So again, if you don't have an administrative reserve and you want to start one, you can start slow. And one way to build it is when you do your annual operating budget, include a line item in there to build the administrative reserve. I mean, it doesn't have to be big money, but just start somewhere to get, again, your goal over time is to have at least 1 year's worth of your operating budget in your administrative reserve to carry you forward on times of, budget impasses, things like COVID-19, when all your fundraising money, just went away because you couldn't have any events, all those types of things that are beyond your control. So investment of the administrative reserve. So you have this money and you say, okay, how, like, if it's a little bit of money, it's like not a whole lot, but if it's like Lisa's case, you have 3 months worth of your operating budget in your administrative reserve. Having that money sitting in a low or no interest bearing account is not wise. You want your money to work for you. So we advocate that administrative reserve should be invested and a balanced, conservative balanced approach is 65% equity, 35% fixed. But again, what if you have to draw on the administrative reserve when the market is down? Like yesterday, you had the money yesterday, and you're going to pull down on your administrative reserve when the market is low. Well, you don't want to be in a position to be forced to do that. So what's the solution? A solution could be a line of credit. A line of credit, again, working with the administrative reserve, can give you access to that necessary operational cash during the market downturn so that you can keep your administrative reserve fully invested. And that really is what you want to do with your reserve, keep it fully invested. So what's a line of credit? A line of credit is a flexible loan from a financial institution that consists of a defined amount of money that you access as you need it. You don't actually get charged any interest until you have actually borrowed some money. Typically there might be like a small annual fee or something like that. Some banks will waive, for nonprofits, they'll waive some of those small fees. The financial institution, typically, I would say always, will require some type of collateral for the line of credit. A future promise of cash, such as a reimbursable grant, may be used as collateral for something, but they're not going to, like in Lisa's case, they wouldn't have collateralized the whole thing to get her to that point because it's risky and they wouldn't have done that. So unencumbered physical assets, and unencumbered just means you don't owe any money on it, you own it free and clear, such as your buildings, are often used to collaborate a line of credit. And the administrative reserve itself will typically not be accepted as collateral for the line of credit because the bank understands, the financial institution understands that that's money that you need to have available to you in a crunch. So you won't be able to use that for your administrative reserve collateral, for the line of credit collateral, I'm sorry. Assets with donor restrictions, so permanently, in the old days, it was called permanently restricted net assets. They may not legally be used to collateralize the line of credit. So just know that if you're sitting on a big endowment over there in your organization. So back to the policies, if you have a line of credit, you need a line of credit policy. to establish the approval process, to draw upon the line of credit, and then also to keep the board of directors informed regarding the line of credit. And so here's some sample elements of the policy. Again, our Finance and Audit Committee, we're set to review all proposed draws on the line of credit. They then make a recommendation to our full board of trustees. All draws on the line of credit must be approved by a majority of the full board of directors. Now that is restrictive, and I would say that might be where you start out, but over time, as your board and you become more savvy using the line of credit, I think you would need something quicker to a quicker response than doing the whole board. Lisa, would you explain how your draws on your line of credit are accomplished?
Sure. The policy says that we need the recommendation of the Finance and Audit Committee and then 2 officers to approve. And you're absolutely right, Betsy. To get the full board, it does take time because, like you said in the beginning, our fiscal coordinator, like at 6 o'clock in the morning, every morning, I would get a text saying, "No money hit the bank yet. No money hit the bank yet." And I would always wait because the money was promised, so I knew it was coming in, and so I would push it, thinking, okay, well, we got 2 more days. So I would push it and wait until like the last minute. Sometimes I would even get the Finance and Audit Committee and the 2 approvals and just say, hey, this is what's happening. If we don't get the money, I'm going to need to, do I have your approval in 2 days to pull this? So I would position to be able to pull it if I needed to. But then if by some miraculous way the money came in and I didn't have to, that was great. But right now, as it stands, it's the Finance and Audit Committee, 2 officers, and then because you can communicate electronically, I always let the full board know what's going on, but assure them that we followed the policy to get there. So
cool. Thank you. So you always want to report back to your full board, even if you are just having a segment of your board, like a Finance and Audit Committee doing the day-to-day type stuff. You always want to have the board of directors informed of what's happening on your line of credit. Just make that part of your, if you meet quarterly, a part of your board report. That's one additional report that just needs to happen. We also put as part of our policy that our Finance and Audit Committee is going to look at do an annual review of the activity on the line, just make sure that we're where we need to be, and do we need to make any changes to the policy moving forward. So back to domestic violence services. So remember, they have significantly increased their programming, which means that they need more money to operate, because, and coupled with the fact that the reimbursements from the state are taking longer than they used to, so they're really in trouble. They need to increase their line of credit. Well, their financial institution was willing to go from 50 to 100 using that building that I talked about. They own a building free and clear in Washington. So the financial institution was willing to go from 500 to 100,000 using the building and some other assets as collateral. The Community Foundation gave domestic violence services a grant of $150,000 in a form to purchase a designated certificate of deposit with the financial institution, and that collateralized the line of credit to $250,000, which is really what domestic violence services needed. All earnings from the CD are to be reinvested. This is all part of our grant agreement with domestic violence services. All earnings from the CD are to be reinvested as the CD is renewed, so that over time, and they maybe need to increase their line of credit. That's a way in which they would be able to increase the line of credit. The current CD term is short because when it was bought last year, rates were very low. We had a meeting yesterday with some of our investment professionals, and pretty much the industry is expecting that the Fed is going to increase interest rates probably 3 times this year. And so when that happens, the CD rates are going to increase. So we'll just keep an eye on that. And when the rates rise, the CD term will be increased to take advantage of that longer term and lock into the higher rate. So according to Lisa, the grant was a godsend. Rather than me reading it, Lisa, why don't you just explain a little bit of how the line of credit is working for your organization right now?
It's unbelievable. The amount of stress, because this was quarterly, as Betsy said, 49% of our grants are reimbursable quarterly. So every quarter we struggle with this. And it was, even though we had money, because some could argue, well, you have money in your administrative reserve, why are you so worried? But as Betsy's clearly explained, you don't want to get into that. And so it was like, are we going to be able to meet payroll? And when do we have to tap into something? And the administrative reserve prior to that. And like Betsy said, what's the market going to be? And when can we get it paid back? And so I just can't tell you the stress that it has, not just me, but our entire fiscal and admin department. I mean, it was a huge worry, and I'm not exaggerating. 6 o'clock in the morning, it was a group text, and no money. And that's just like, ugh, what a thing to wake up to. Your phone's dinging and it's like, there's no money. And so this has allowed us to be able to know that we have this safety net, easily be able to access the line. No, we won't have a lot in interest rates because we know that money's coming in. It just didn't get there quite in time. The reimbursement comes in, we pay off the line, and we do business as usual seamlessly. So it's been incredible.
Thanks, Lisa. So the one other implication of this line of credit administrative reserve, there's this auditing accounting principle. It's called the going concern principle. And it's for both for-profit and not-for-profit organizations. And it has to do with whether or not the organization has the financial resources to continuing operating indefinitely, quote unquote, as a going concern. Your auditor is required to include a going concern statement in your audited financial statements. And if they have doubt about your ability to operate as a going concern, they're required to put that into your audited financial statements. I've seen some of those, they're pretty alarming. But properly managed, the administrative reserve and a line of credit helps to make the case that you are in a financial position to continue as a going concern. So they can be a strength to you on your balance sheet or in your audited financials. It's not like some people may think, well, you got to get a line of credit, there's something wrong. No. It's a tool. It's a tool. We have a line of credit. We've never put anything on our line of credit, but we have it. We have it just in case we need it here at the Community Foundation. So I know there are some people on the call who don't get government grants the way that Lisa's organization does. But that doesn't mean that you would not benefit from having a line of credit. A line of credit, again, enables you to keep your administrative reserve fully invested. So if you, I know some of you have you've worked hard to build your administrative reserves, and they're sitting in money markets and little CD accounts that aren't getting any return at all. But because you think I may have to draw upon them at some point, and so we want to make sure that the money is accessible to us. I know several of you own your own buildings, and so if you own your own building, it will be very easy for you to get a line of credit as the building as collateral. Again, don't look at it as a negative for the organization. It's just a business tool that tons of for-profit companies use. And honestly, I think more not-for-profit companies should be using to strengthen their organization. So at this point, I want to open it up to just questions from anybody. Let me do my stop share here. Anybody? Questions from Eddie?
This is Dave Brown. I have a question. I understand about having the administrative reserve there 6, 9, 12 months, but Is there a rule of how much cash to have on hand just to pay the normal bills, like 30 days, 60 days?
Well, only you can answer that if you're the treasurer. It's like, I don't know what your situation is. So you have to look at what your cash flow need is. Now, you are for the Bradford House, right?
That's correct.
Right. So you're not going to have the same cash flow needs as Lisa, who has the bulk of her expenses are salaries, payroll, because they're counselors. So she has to pay her staff. In your case, I would think that your cash requirement is not as great unless you are building a visitor center across the street and you don't have the money, or you get a reimbursable grant from the local share account to do something, but you don't have enough cash in there. So you have to determine on your end what your personal cash flow needs would be.
Yeah, because we do have salary and naturally occupancy costs, office expenses, et cetera. So
Right.
It sounds like we may need several months, but maybe not 9 months of cash on hand in addition to the administrative reserve that we have.
Right. Yeah,
Okay.
I would say, so you now own the Bradford House free and clear, right? Is that your?
That is correct.
Right. Yeah. Now, so it would have limited use. So you'd have to talk to the financial person, but that's where I would start, Dave. I would see if you could get a line of credit with that as your collateral.
Yeah.
As long as
Being a historical facility, I think that might be a little difficult, but it's something to explore. The other question, the last question I had was, you talk about having the line of credit, and even if you don't use it, but most banks do charge you something, although it's minimal in terms of basis for keeping an unused line of credit.
Yeah.
Have you seen, or do you have an idea on how expensive that is? Is it 3 or 4 basis points, or what
Oh,
is it?
no. It's typically, work with your financial institution. They may waive many of the fees if they possibly can. It's not a basis point thing. I think it's a flat fee. You pay an annual flat fee, $100, $120. I don't know what it is. Quite honestly, they waived it for us. So I don't know we don't pay anything. And that might be your case too, that they may waive that. I will tell you that the collateral for our line of credit is a historic building. It's the Brownlee House that's on the National Register. Now, we don't operate it as a museum the way you do, but our house is the collateral for our line of credit.
Okay.
The key is that you own it free and clear.
Right.
What its use might be if the bank had to foreclose. So that'll all come into the appraisal of the facility.
Right.
Yeah, I will tell you, let's talk a little bit about appraisals, Dave. We recently bumped our line of credit like in December, and we had done some rehabilitation to the house, and we completed a conversion of a 3-car garage into a meeting space. And so we wanted to up our insurance. Well, to increase the insurance, we had to get an industrial appraisal to say what the current value of the house was. And of course, it was higher. So we were able to get our insurance increased through the industrial appraisal. And I talked to our financial institution, and they were willing to take that appraisal, that industrial appraisal, as the basis to increase the line. So I didn't have to spend another, $2,000 to get an appraisal to increase my line of credit, because the bank was willing to take that was done for another purpose. So why we did it was the timing fit for us because we were already doing it.
Okay, thank you.
Any other questions from anybody? Let me ask you this. So we're thinking that our next training will be specifically regarding investing of the administrative reserve and or endowments, if you have that. Would that be of interest to anyone?
Absolutely.
Okay. Anyone else? Something in the chat. Yes.
Yes, for sure.
Yes, for sure. Okay. All right. Well, we're hoping to put that together for February. you'll get notified, you know, through our normal thing. So if there are no more questions about administrative reserves or lines of credit, I think Karen has some stuff to share.
Good afternoon, everyone. So as we're talking about grants, helping everyone along there, I had a few changes that we have had, not changes, but a few updates. So we have asked in the recent Charity Matters, we had a link in there for any updates, for any changes in contact information within the organization. So we would ask that you know, if there's a change, that you let us know and that you take the time to fill out the form. We're going to make sure that's on our website as well, but I will also make sure to get the link out to all of you that we have currently. And also with that too, with our grants, since the onset of the pandemic, we switched over to electronic payments, some of you may know. So if any of your ACH or electronic payments have information has changed, we would need that as well. And we have a ACH form. So just reach out to us and let us know, and we will get that out to you. We've also switched over for grant agreements. I just wanted everyone to know that if a grant is over $5,000, it requires a grant agreement. So when you get a notification, we are now sending the grant agreements out through Adobe Sign so that you will be able to just sign right then and there and be able to follow the directions, and it'll come right back to us. So if you get a notification for a grant, look for that email to come through following that and get that back into us. That'd be great. And then grant reports. The grant reports are due anytime on or before 1 year from when you receive the funding. So if it requires a grant, requires a grant report, then it doesn't mean that you have to wait until, you know, a year from now. If you finish up the project, then by all means go ahead and access the grant report, which you can get to the grant report on our website under grant seekers, and there's a grant report and it will take you right to the link, and it's an online report. So those are some new updates, and thank you so much for joining us this afternoon.
Everybody, I just shared the link to the charity contact update form. So if you do have any changes, just go ahead, you can access it from there. It only takes a couple of seconds to complete, and we really appreciate it. We want to make sure that the information we have regarding grant opportunities and webinars like this are going to the right people in your organization. So that form helps us to do so.
All right, so we thought this would be a 45-minute thing. It looks like it's going to be 35 minutes. But so essentially we have some time for any questions about anything that you might want to ask the Community Foundation. Does anybody have anything? So we still have a little bit more time. We in the Charity Matters that we sent out in January, we talked about our Three Oaks internship fund. We're going to have do 2 grants this year to provide a grant to an organization to have a student intern. You're curious, like who amongst you have interns, and if you have them, do you pay? Anybody have an intern?
Betsy, I can share with the group. I've already shared with you. We currently have 2 interns. I typically have an intern every single semester, and we do not pay.
Okay, so I expect you'll be applying for that grant. No one else has interns?
We utilize interns and we do not pay.
Yeah, but you would if you could.
Yeah, sure. Yeah.
Okay. Yeah. All right.
Because really some of our best people that we've hired have been interns.
Yeah.
You know, so it's like a nice trial run.
It's a good screening tool. You know, if you get a good intern, you know, when they're done, to offer them, you know, if you have something available, for sure. All right, well, I'm gonna throw it out one more time. Any other questions for the group from anybody about anything related to the Community Foundation? All right, hearing none, I guess we're done for the day. Stay warm, everyone.
Thank you for all you do.
Okay, thank you.
Bye.
I love your
Thank you.
welcome.
Thank you.
Bye.
Thank you.